A good rule of thumb that I like to go by and advocate folks is really look at some of what these pension funds or endowments, in the country, what's their overall weight to the alternative space.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast. My name's Randy Smith, and I'll be your co-host or your host today. And really excited to have a good friend of mine, Rob Natale, on with us. Rob is the founding manager of North Square Capital. He is a real estate investment firm that's based in Boston, and he's been an LP in 4 deals, and he does what I do as well, specifically in the medical professional space, and he helps medical professionals decrease their dependence on their W-2, just like we do at Impact Equities. So, Rob, welcome to the show. So glad to have you here.
Hey, Randy. Thanks. Great. Thank you for having me. And I hope you had a wonderful Thanksgiving.
Yeah. Thank you for that. And you as well. I know we talked earlier. I did a little travel and you went and saw some family or spent some time with some family, which is always a great time. So, well, yeah, Rob, super excited, like I said, to have you here. Why don't you go ahead and kick it off and just tell us a little bit about yourself and how you got to where we are today.
Yeah, no, absolutely. And thanks again, Randy. So for everyone out there, my background has historically been in the asset management space. So for several years, my days were really filled working alongside financial advisors. So I was providing a lot of different investment products like mutual funds, exchange traded funds, 529 plans, really the full breadth that you could think of. And a lot of the advisors I worked with, they were based across the Pacific Northwest, so Washington State, Oregon, and Alaska. And some of these advisors and the teams, the AUM, the assets under management, they could be from 20 million all the way to $3 to $4+ billion in assets. And one of the things that I really noticed was a lot of these highly successful teams, they operated in isolation. They rarely showed, or at least I found shared new type of ideas or strategies that could benefit really a more sophisticated audience. Like clients I work with, Randy, clients that you work with, and really, Randy, your audience that listens to your great show. So I contrast that to really the medical community, the medical industry, where a lot of collaborations utilized and sharing information. That's really the core of what its existence is. And medical professionals, they've always pooled together their knowledge and resources to provide the best care for their patients. I come from a family of medical background where multiple family members were in this space, and I just witnessed a lot of their unwavering dedication and the efforts to care for their patients. And it always put their needs before their own. But I noticed the toll it took on them, the exhaustion, the burnout, really the overwhelming stress, and where work-life balance was more so a luxury that I found they couldn't afford. And on top of it all, with my experience in the financial, services industry, working with financial advisors, I noticed, how that industry poorly served them. So I kind of really had a light bulb moment for me of what organically found to be a calling or something what I really felt like I needed to do. And where my mission now is really, it's to help medical professionals, it's to buy back their time and expand their wealth through passive real estate investing opportunities. And that's really what brought me here today.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Awesome. So quite the journey. You played for a lot of years in the traditional investment world, which, we've all invested there. We've all probably made a little bit of money, lost a little bit of money, did the stock market roller coaster, as I like to call
Sure. Yeah.
it. And you ended up coming up to this point where you saw that there was a need that wasn't necessarily being met by the traditional investment community. So very interesting. Now, you mentioned that it's somewhat of an underserved um, community, doctors, folks in the medical profession. When you're talking with folks in that space, is there like common themes or misconceptions or beliefs that are starting to promulgate in that space that would keep people from investing in this space, or are they generally open to this type of investment?
So I find it's four main components of why folks are hesitant or / really apprehensive of getting involved. It's one, they think they don't have the time. Two, they don't think they have the money. Three, they wonder, is this the right time to invest? And lastly, the learning curve. Is there a steep learning curve to be competent to invest? Because doctors, they spend, as you medical community, 8, 10, 12 years becoming specialized in what they do. So there's not going to be one to jump into anything without having that knowledge base. So that's really the last bucket as well, is can I get myself to that level where I feel confident in investing?
Yeah. Yeah, I think that's a big piece too, because since this is more readily available today than I think it ever has been, it's still somewhat of an unknown to a lot of people. And even last week I was talking with somebody that worked at Fidelity, and they had never heard of the alternative investing space. And it's baffling to me that professionals that work in this space don't know about it. And maybe they do, maybe they don't. But I suspect that there's not a lot of motivation for them to be educating their audience about these type of investments. Is what I suspect.
Randy, you're spot on. So from a financial advisor standpoint, some of these major institutions like a Morgan Stanley, let's say Merrill Lynch or Wells Fargo, a lot of advisors are compensated based off of their assets under management. Typically, you're going to find that somewhere between 1 to 1.5%. So let's say if they're managing a book of business, let's say that's $100 million of AUM, 1% of that is $1 million. What you're speaking to, Randy, is there's a conflict of interest with the type of investing, getting involved in passive real estate and opportunities like we talk about, Randy. The reason being is a lot of these opportunities are not available, let's say, at some of these major institutions like a Morgan Stanley, like at a Merrill Lynch. And because of that, by them, let's say, recommending to a client or educating clients about really alternative investments, that could mean assets that they are not managing, which directly impacts the type of their direct compensation. So that's something that I found quite prevalent in my time when I was in that world, which was another really contributing factor for me of educating and bringing about outside of investments, just like the traditional stock market and mutual funds, to help people really build a well-diversified overall portfolio to get them towards financial independence.
Yeah, I think that's the buzzword here, and the key is that I think everybody should hold at least a portion of their investments in alternative investments, just from a diversification standpoint.
Yep.
And what percentage that is really depends on your personal preference. But I know when I first got started, my wife and I decided we wanted to have some exposure to real estate. So we started buying single families. And then we found the syndication space like you and I deal with. And now that we've got some years under our belt in the space, at the beginning of the year when we're doing our financial planning, we decide like how much of a percentage of our investable capital do we want to have in this space.
Yep.
And, we've seen that grow from 10 to 15 to 20. We're over 50% now at this point. So do you have any thoughts or suggestions or strategies that you share with your investors?
Yeah, I do. So someone asked me that question, and you spoke to it too, Randy, of what's a good percentage to have in your portfolio in the syndication, in the real estate world? A good rule of thumb that I like to go by and advocate folks is look at some of what the largest pension funds or endowments, in the country. What's their overall weight to the alternative space? It's usually somewhere between 22 to 25% of their overall portfolio. So the way I really advise folks is you start with that percentage, and then you either stay around that number, you go higher, or you go lower based on the conversation, what you're looking for, risk factors, liquidity, and et cetera. And that's really where having those discovery type of conversations is very important, that we have with our clients to really find out what's the best fit for them.
Love it. Love it. So let's say you meet a new medical professional and they're interested in this space. And let's just say, for round numbers, they've got $1 million in investable capital. Based on that math, you might suggest 220 to 250,000 of those dollars be placed in the alternative investment space. So if that avatar were to come to you, how would you suggest that he place, a couple $100,000 in capital? Would you suggest put a couple $100,000 in one deal, spread it across 50 grand increments across multiple deals, or what would you suggest?
Sure. So it all comes back to really asking questions and getting that deeper knowledge of what they're trying to do. So one of my questions would be, let's say if they had 250,000, that my recommendation would be to put through in a portfolio. One of my questions would be, okay, out of that 250, how much do you want to invest in the next 12 to 18 months? Right. Let's even start from there and try to reverse engineer it back. So let's say, because if they said they wanted to invest, that full amount, my personal recommendation always is I'm just a big fan of diversification across investments. I just think it's a really good, sound, prudent strategy. So my first recommendation would be diversifying that across a few different investments, and then finding out, okay, what specifically they're looking for to get out of their investment opportunity. Is cash flow most important for them? Is it appreciation? How important are the tax benefits for them? And then also too, making sure that what we do is a great fit for them. Because we have conversations like I've had and you've had too, Randy, where you have conversation with folks and you find out, hey, what we offer, these type of investment opportunities maybe aren't the right fit. Some folks, who are very, very hands-on, and they're not as comfortable allowing a professional manager to essentially dictate kind of how their money is going to be managed and what the hold period is going to be. And that's okay, right? Like anything, not these investments aren't going to be for anyone, but for the investments that they are, and I'm extremely bullish on it, needless to say, that's where the conversation comes in, and you find out how much you want to invest, what's your main objective in investing, and really go from there.
I love it. And I love the fact that you talked about this is not the right thing for everybody. There are some people where this, specifically if control is an issue, then this is probably not going to be the best. You might be better off just buying a single family or 2 or 3 or 5 or 10. But it all comes down to, I like to look at, what are their personal strengths that they're bringing? And you're either bringing capital, energy, and expertise, or you're bringing some type of network to the table. So, really good summary there, Rob. Well, let's kind of dig into some specifics. So here we are. This is being recorded at the end, just after Thanksgiving. I guess everybody knows. Some crazy things going on with the economy. A lot of fun headlines out there about a bunch of different asset classes. So where are you spending your time and energy, and what asset classes do you like now?
Yeah. And I'll even give before I answer that question directly, I'll just back up where I've been historically. So historically, I've always focused really in the value add multifamily space. So 50, 100, 150 plus unit apartment buildings where I will go and vet out a specific operator and then vet out a specific opportunity where if both of those boxes are checked, I am inviting my client base to partner alongside myself to invest in those opportunities. Historically, that has been in multifamily, again, value add, where the business plan is, let's say, rents are too low, vacancies are too high, expenses are too high, and we are partnering with an operator who we have the conviction and confidence in that can execute a business plan over a 3 to 5 year hold period that more or less is going to double our money in that period of time. That's the goal and the objective when we get in there as far as a return profile. We are still very much bullish in multifamily. You hear a lot of folks say it, people always do need a place to live. Well, it's true, right? They say it because that is part of it, because it's true. However, since really September, what you spoke about, everything, a lot going on in really the marketplace, been a lot of research and talking to different operators, viewing different asset classes. One of the asset classes now that I'm getting very excited actually about, we're going to be working on some different project next month, is the short-term rental space is really where the focus being. And the reason being is, one, it's the overall, the moats and the barrier to entry to really institutionalize the asset class. You think, Randy, and for those out there listening, if you have, let's say, an Airbnb, say you own 1, you own 2, you own 3, well, think about multiplying that by 50, 60, 70 in different geographic regions, maybe different property types. You have to be aware of different Airbnb laws going on. There's a lot that goes into that space. And in addition, if you think of it, the Airbnb space now, right, and which we'll talk about, is there's a good amount of supply out there. And just by putting in, going to IKEA, getting a desk and some lamps and throwing that on there isn't going to really get the job done like it used to. So we've found a group that we have a tremendous amount of conviction in that is going to be institutionalizing the short-term rental space. And that's really one of the major reasons why I'm very excited about that specific asset class. It's an untapped opportunity where you're working with, again, it's all about the right people, the right operators that can execute a business plan, which I feel this group can. The name's called TechVestor, for those who might be wondering. And that's why I'm extremely bullish on that space and working with that group going forward.
Love it, Robin. And I love TechVestor as well. I've partnered with them, and I've brought that investment opportunity to my investors. And in fact, I just literally this morning paid my first distributions on my TechVestor fund that I launched this year. So exciting days for our investors today. But let's talk a little bit about some of the challenges that we're seeing a lot. A lot of the headlines talking about short-term rentals today sound scary. That the market's flooded, and we're seeing average rents drop, and we're seeing a lot of cities throw up flags and saying no more. So, how do you respond to those objections or those challenges, which we all know our investors are seeing the same headlines we are?
Sure. No, 100%. Those are all very valid, I think, concerns that you might see, that you read. So I fully recognize those. And that was one of my questions too, right? If going on and, partnering with TechVestor and starting to raise in this strategy is, what are some risk mitigation? What are some strategies, let's say, within this portfolio, within what's being done, that we can prevent some of those things? So, and some of those include the following. So one, it's focusing on not the, let's say, like major cities, let's say like Miami or even New York. For example, New York in September is pretty much put the kibosh on short-term rental and Airbnb. It's pretty much, for all intents and purposes, finito. Okay. So it's focusing maybe more on what we call secondary or tertiary type of markets. So not these major cities that you might be thinking of, but also focusing more on more short-term rental friendly states and cities, like I'm speaking about, secondary and tertiary. Now, let's say, right now, that's one piece, but let's then say something comes down the line where there's a change. They say, hey, you can't do short-term rentals anymore. So then how do we get around that? The way you can get around that is with this portfolio, working with TechVestor, these properties can not only be rented out as short-term rental, but they can be rented out as medium-term and long-term rental. And the other piece around that is, let's say none of the properties are cross-collateralized, and I'll explain what that means. So in a portfolio, you might have there's a total of 100 plus individual properties that are making up across the two different funds. So let's say you have two funds in a city that has said Airbnb is done. And you look into the numbers and you feel that, medium and long-term rental doesn't make sense. Not only can those properties be sold based off of, let's say, comps, like you do when you buy like a single family home.
Yep.
It could also be sold based off of net operating income, which is very prevalent in commercial space. And lastly, that I spoke about, none of the properties are cross-collateralized, meaning not one property is tied into another. They all can be sold as each individual entity, so to speak, which is huge, because if you have all properties tied in together, that's when things can get very complicated. So that being explained to me, that logically made sense as a good risk mitigation strategy. So that's what I would say to folks in a worst case scenario, if that was to occur.
No, yeah, I think you hit the nail on the head. What I liked about this specifically, like you said, midterm or long-term rental, or we can sell them. And there's a lot of people that are investing in the short-term rental space that might want to buy 2, 3, 5, 10, 20 short-term rentals that are in place, that have historical data.
Yeah.
Even if the REITs don't want to buy 100 assets from us, there are a lot of folks out there that would pick up 5, 10, or 20 of them. So, and then again, we all know that there is such a demand for single family homes. Yep. And fortunately for you and I, Rob, and our investors, the majority of our assets all of the assets in this fund have been bought in 2023, which many would argue are at a 20% discount to what we saw just a couple of years ago. And the second we see those interest rates start to dip again, we're going to see the prices go up. And that's going to drive even more returns to our investors. So I think you hit the nail on the head there talking about that. And, of course, the best case scenario is if we do sell this to an institution or a REIT or private equity, that ultimately would be the ideal situation where TechVestor can unload, 50, 100, 200 of these units at a premium because they've established the businesses, they've got historical data, and it's really just a turnkey yield play for private equity and their investors. So really, really great points.
No, absolutely.
Well, let's talk about, if we can, I know you've done multifamily in the past and you've just gone through like a operator vetting process. So talk, if you can, a little bit about what you did to get comfortable with not only TechVestor, but some of the operators that you've worked with in the past and how that's changing or evolving as you look at new partners in the future.
Yeah. So one of the things now that I'm very bullish on going forward, which has been the case historically, but I have more conviction in, is working with an operator that is vertically integrated. So vertically integrated is an operator that is not only implementing a business plan, but they have their own in-house property management company. Yeah. And one of the things that I feel that's very important about that is if they have their own in-house property management team in place, I feel like the excuse of, we're working with a third-party property manager and things kind of falling through the cracks.
Yeah.
That doesn't exist, number one, because there's a lot of property management companies out there, and you hear the stories of groups that hire third-party property managers, and they feel really good about them, and then you check in, 2 to 4 or 5 months later, and things are just, not all lollipops and rainbows, so to speak.
Sure.
So you hear those type of stories, and outside of even that, just having everything under one roof, like anything else, it just streamlines everything and makes things more efficient, not only from production, but also from a cost perspective, I would argue very much as well. So that's one thing that I've always been bullish on, but now I'm even more so now than really ever before, especially in the type of environment we're in. Yep. As far as some other due diligence type of questions or procedures, I think it's very important for us, Randy, right? We're both fund managers. We are presenting opportunities for our clients. We are doing a lot of the vetting, and they're relying on our knowledge and expertise to do so, is going through and conducting background checks on some of these groups and individuals, not only both credit and criminal background check, to make sure that everything is really candidly the way it seems. I've
Mm-hmm.
ran some, I myself especially have ran some things on the criminal side that I've found surprising, that is then put where I've no longer wanted to proceed or work or go forward with a group because of what I found. And you even then would have that follow-up conversation to get some more color around it. But I
Sure.
think that's very important to do because people are putting in their hard-earned money, and quite candidly, a lot of money in some of these investments. You want to make sure we're with people and individuals that are good stewards of capital and good
Yep.
human beings and good groups as well.
When I first heard this idea of doing background checks and credit checks on operators, I had no idea even where to start to do that process. So it took me a number of weeks to get comfortable with that process, but I'm glad to hear you're doing that as well, because like you said, some interesting things will pop up from time to time. And it's not to say that if people have a history that you shouldn't do business with them, but I would say even more importantly than that is if there is some things that they address them directly and
Yep.
confidently, and you feel comfortable in it. So I think that says a lot about an operator as well, because at the end of the day, these are very big businesses that are being run, and
Yep.
it's inevitable that some people are going to get upset and are not going to like the results at times. And sometimes just bad things happen in this space as well. So it's important to know how people are going to respond when and if that does happen.
Yeah. And I think one thing too that you've heard me echo a lot, and I know for those listeners out there that have listened to Randy's show, and Randy, I think you got to be up to 100, you're up to 150 plus episodes. So kudos to you, man. You've done a great
Pretty
show.
close. Yeah.
I'd say one of the things that you'll notice is really it's all of the individuals at the top. You hear that expression too. Who's the jockey involved? Or the captain? Who's steering the ship?
Yep.
Because there is going to be situations that are going to come up that aren't ideal. And it's all about making sure whoever is in charge, you have the confidence, conviction in that is going to get that on track. And again, I emphasize this word a lot: execute the business plan to bring the returns and the positive outcome for my investors, your investors, Randy, our investors in general.
Love it. I love it. Well, great answer. Clearly, you've put a lot of thought, and there's been a lot of energy and effort that you've dedicated to this due diligence process. What are your thoughts on, the level of due diligence that needs to be done on a specific deal after you've vetted an operator and maybe you've done a few deals with them? Like, what does that vetting process look like when new deals might come across your desk? Do you just, every deal that an approved partner presents, do you put those in front of your investors, or are there a selection process there as well?
Yeah, so it's definitely the latter. So even after working, let's say, with a specific operator for a few times, you still, in my opinion, do want to do due diligence on that specific deal, on the opportunity, on the business plan, how are they getting to what they're getting to. So let's say it's a value add multifamily opportunity in Dallas. You want to look through the underwriting. Does the rent growth seem appropriate? Does it seem aggressive? What does the CapEx budget look like? How much is going to be put together right per unit per door? You want to go through all those things to make sure they logically make sense to you. And then on top of that, in addition to kind of looking through the underwriting, one of the other things I'm going to be implementing too, Randy, going forward is not only myself looking through it, but as a third set of eyes, bring in really an outside individual to look through it itself, just so, as opposed to the second set, let's do a third set of eyes. So I just feel like it's an added level of service that I would like to be able to provide my clients as well when looking through these deals and opportunities, because similar to for a lot of the medical folks and community out there, one of the things they follow, Randy, and I'll tie this into what we do, is there's the Hippocratic Oath. And one of the statements is really, do no harm. So from my perspective, I kind of view it as let's say a financial, Hippocratic Oath. And one, don't lose money, right? Do not lose principal and go off of that. So it's very much important that I feel to definitely conduct due diligence on individual deals, not just kind of saying, oh, here's a deal, I've worked with you in the past, this is good to go, because things can change, markets can change. Just past, as you hear some folks say, past past performance isn't indicative of future performance. That saying, I'm not quoting it verbatim correctly, but it's along
Sure.
those lines.
Yep, exactly. Well, very good, very good. Gosh, I'm looking at the timing here. It's crazy that I hear you talking about your business, your due diligence process, very, very similar to what I'm doing as well. There's a lot of similarities there, which makes me feel good as an operator that I'm doing due diligence similar to what other high performers are doing in the space. And I know you're a good steward to your investors' capital. So to hear those similarities makes my heart warm. So let's, of course, I've got a few questions that I like to ask everybody, but
Yeah.
is there anything that you wanted to discuss today that maybe we haven't discussed yet? Are there any things you want to go deeper on, or anything else we want to share with the audience from your perspective today?
Yeah, I would say for all the audience out there that's listening, it's a short, simple question, but I think it involves reflection. Is know your why. Why do you want to invest in real estate? So, and peel back the layers, right? It's why do you want to invest in real estate? Okay, I want to generate passive income. Okay, why do you want to generate passive income? Oh, I want to do some more traveling. Okay, great. What does that traveling entail? Do you want to do that yourself? Do you want to go through family? It's really discovering why you want to get involved in this space, because that's going to get you to where you want to go. The first time you invest, I don't know if Randy, you were like this. I was myself, right? The first time I invested as an LP, one of my deals into an opportunity, into investment, like it was, I don't know if scary is the right word, but it was a little bit nerve wracking, right? You're
Sure.
doing something that you haven't done before, right? My whole world, like I said, has always been involved in, the traditional stock market, but then doing the research and really knowing what my why is. And for those wondering that, what's my why, it's really to be able to spend more time, with family. I'm a huge family guy, and spending time with my three nieces who I love seeing and spending his time with as much as I can. And this type of profession can provide that opportunity to do so. And then from the investment side of things, right, building out a predictable stream of appreciation and income, right? So when you're thinking about what's your why, if that's a big component in being able to do that, this avenue can do it. The stock market, right? We've all made money in the stock market, but it is a roller coaster. And depending on when you're retiring or when you want to do something, if you hit the wrong year, your portfolio can be down 20 to 30%. So it's a complete timing situation versus what we are doing. We can help really build people out a predictable path of where they want to go on a time frame that's going to hit their objectives. So I say to people listening out there, know your why of why you want to get involved, why you want to invest. And I think then your decision and being able to get started is going to be a lot easier. And you won't regret it. I'm telling you. I'm going through both sides of the lane. I really truly believe that once you start getting involved in the space and you hear and you learn about what really isn't being taught, again, by the general broad financial services industry, it's going to be very eye-opening.
Love it, Rob. Thank you for that. I think that's kind of the perfect finish to our recording here. Really kind of echoing my same point is like, just make sure you want to know your why. And a lot of people, like I know when I first got into the space, like I know I just wanted to invest in real estate and I didn't know why. I came into the space and invested very heavily in equity plays that would grow my equity fast, but I didn't pay a lot of attention to cash flow. And then when I got laid off, it was a surprise. I had a lot of money invested in the stock market and in real estate, but it wasn't kicking off cash flow. So finding investments like the TechVestor offering that you're doing, which are really kind of the perfect marriage of cash flow and appreciation, you get the best of both worlds. I think is a really, really smart move. So, well, let's jump over into kind of the final section of the podcast where I ask a number of questions to everybody.
Okay.
Obviously, you're really well educated and well known in the space now, Rob, getting more and more well known as the days and weeks and months pass. But is there a specific educational resource that you would suggest for the new or newer passive investors that are jumping into this journey?
Yeah, so I'm going to speak to predominantly, I know, to the medical community out there for some folks. There's a couple. If you're looking for a general podcast, there's so many different podcasts out there. And Randy, I'm going to be shouting out for your podcast. I don't care if I'm a guest on here. You bring on outstanding guests that cover a variety of different, I feel like, sectors within the commercial real estate space that we're in, which I think is fantastic. So this is one of them for sure. For the medical community out there, there's two different podcasts that I think are outstanding. One's called the White Coat Investor by Dr. Jim Daly, and then there's one called Passive Income MD by Dr. Peter Kim. They talk about a number of different strategies in addition to real estate, but very much geared towards the medical community. So that's real estate, medical community, and lastly, from a broad educational, I would say, resource for a podcast. I myself am a big fan of Ed Milet, motivational speaker, coach. He has a podcast called The Ed Milet Show, and similar to you, Randy, while it's not maybe as much geared towards real estate, he brings in different guests and speakers across all different industries.
Yep.
And every time you listen to it, you always learn something new, something unique. And he's also just seems to be a generally good dude as well, like yourself.
Yep.
So those would be, I know I gave 4, but to recap, Randy, yours specifically geared for real estate, White Coat Investor and Passive Income MD for the medical community out there, not only from a real estate, but also some ancillary type of educational components. And then just in general, Ed Milet, the Ed Milet Show, I think is spectacular as well.
Awesome. I think you could take those 4 podcasts and just listen to those every week and become as educated as you could ever need to be in this space to make that first investment, no doubt. And Ed Milet, I love Ed Milet. I saw him in person last year, and there was not a dry eye in the audience.
Yeah.
And I felt like we could have, charged the mountain after hearing him speak. He is unbelievable. And motivating, inspiring, just an awesome podcast. I'd encourage everybody to listen to that. So, All right. Are there any particular books that you have read recently or in the past that you think that you'd like to share with the audience?
Yes, I'd say there's 2. One is, again, outside of, it ties into the real estate space, but Dr. Jim Daly for the White Coat Investor, he wrote a book that is called like the White Coat Investor. That is spectacular.
Sure.
Recommend for anyone, especially in that medical community, to read that does cover real estate. And then something that, while I didn't create necessarily per se a traditional book, I created an ebook, something called Financial RX. So challenges and strategies unveiled, that really covers, it's about a 20-page ebook that talks a lot about the medical community, some of the challenges that they're facing in their current space, reviewing it kind of like a diagnosis, right? When you have a patient or when a doctor brings in a patient, you're diagnosing kind of what's going on and maybe some different strategies to implement to help improve that situation and to cure that situation. So I put together an ebook. Again, it's called Financial RX, Challenges and Strategies Revealed, that can be found both not only on my Instagram account, but also on my website as well, which we'll speak to, I know, at the end. But those are 2 pieces, I would say.
Awesome. Thanks for sharing that. I didn't know you had done the ebook. I'll check that one out for sure. All right. And now just a couple of fun ones here. If, like looking back over the last year or so, is there a bucket list item that you've recently checked off your list, or one you're hoping to in the near future?
Yeah, we'll do one in the near future. So I'm a big, and this would be more on the personal side of things. So I do love to travel. I think it's great to explore different cultures, cuisines. I love to eat, and getting those type of experiences that I just feel can be very tough to duplicate without traveling. Traveled to Denmark, Scandinavian country, for those who may or may not have been. spectacular. And I do want to get now and visit the other ones. I want to get to Norway and I want to get to Sweden as well. My plan is to get there, I think, April of 2024, April, May, when it's a little bit warmer and they're getting more than 4 hours of daylight as they currently are getting right now as this is airing. So that I would say is short-term bucket list for me, is to do some more traveling, in particular, get over to Norway and Sweden.
Love it. Love it. Love it. Yeah. My wife and I are big travelers as well. And we've got a bucket list to hit every one of the continents, in the not too distant future. So I think we're on 3 at this point. So we've got a long way to go in the next few years. So
including Antarctica. Does that include Antarctica, Randy?
I'm not going to just do 6 of them. So yes, we will find a way to make that happen. Yes.
All right. I know a few folks who we can chat about that too offline. I know some folks who did that. They went all the way down to the tip of Argentina and they took the boat over.
Yeah. Very good. Well, awesome. And then finally, one that I've been asking just recently, because this is what we talk about. We talk about investing. So if you had $100,000 that you had to invest today and you could not invest it in your own deal, where would you invest that $100,000?
Yeah. So for me, I spoke to this earlier on, I know, our interview and our discussion, Randy, but I'd be putting it into this. I can't put it in my fund. I'm putting it in your fund, Randy. I'm putting it into the 100,000 into the short-term rental portfolio through TechVestor. I just am extremely bullish on the space, the people that are running that company and what they're looking to do. That's where my money would be going for sure.
I love it. And I would place my $100,000 in yours as well, because there are investment tools that I use that keep me from investing into my own deals. So who knows? You might see a soft commit coming through soon. So there you go. Well, Rob, it's been great having you on the show. It's, like I said before, it's refreshing to hear that your process and your due diligence process is very similar to mine, because both you and I are helping folks, ultimately decrease their dependence on their W-2 by investing in alternative investments. And people leverage your and my expertise in this space to give them access to other things. So it's so exciting to hear that you and I have very, very similar strategies. But it's been so fun having you on the show, Rob. Thank you so much for being with us today.
No, absolutely. Thank you, Randy. I appreciate it. And for those that are looking they got questions or reaching out and to contact, again, I know I mentioned the ebook. I'm on the social media between LinkedIn and Instagram. I'm most active on Instagram, on Instagram, where I can be found Rob Natale _. And then I can be found, if you want to reach out and contact, northsquarecapital.com. Contact page on there. Again, if you have any questions about anything I spoke about today, looking to get a copy of that ebook, reach me and we can go from there and have a discussion. So thank you again,
Awesome.
Randy, for having me on. I appreciate it.
Absolutely. And folks looking for a referral to Rob can certainly reach out to me as well. Big fan of what's Rob's doing. We've known each other for over a year, I believe now, maybe a year and a half even.
Yeah.
And we belong to some masterminds together. And I've got to see the guy show up steadily, consistently over months, which is something that I can't say about a lot of people. But Rob, you show up and you're an excellent participant. You're an excellent member in the communities that you and I hang out in together. So thank you for that as well.
No, absolutely.
All right. And to our audience, as always, want to encourage you to continue your education journey in this amazing passive investing space. More importantly than the education, though, I encourage you to make a decision to invest in your first passive investment before the next 30 to 60 to 90 days. I'm convinced that once you do, I'm sure Rob is as well, convinced that once you do, you'll be so glad that you did and you wish you would have started much, much sooner. So be sure to join us again next Thursday for another great episode. And thank you again for joining us today.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.